And good evening. This is the Elliott wave update for the S&P 500 index for Monday, October 18th, 2021. The S&P did break above 4472 today. In fact, it closed at above that level at 4476. And that was after reaching an initial high for this particular move at 4479.75. That was enough to force the change in the labeling and bringing down what was initially labeled as wave A of a wave one on an intermediate level to a minor level. And it is still now been moved to wave A, not a minor wave one, but a minor A wave, which does then bring an intermediate degree A wave at the low at 4260. What that now does leave us with is a three-wave decline, an ABC decline to form the initial A wave of this longer-term, larger supercycle degree wave 4 correction. So again, just to kind of put into perspective, what we're correcting here is at 45.59. That remains the all-time high and the completion point for the following: a minute fifth wave, a minor fifth wave, an intermediate fifth wave, a primary fifth wave, a cycle fifth wave, and a supercycle third wave. So what we're now tracing out and forming are the initial first decline to form and now a primary wave A. So we got the initial 5 down that formed a minor A, a B, and a C to form the intermediate wave A. Now we are now tracing out and forming an intermediate B wave. So what does that B wave what can it really hold for us? There are a couple of things that right now we've labeled it that the A and the B wave of this larger B wave are complete. And what we're in is C, wave C of B. So it's a minor C wave within an intermediate B wave. The important factor here to remember is that it is a B wave. B waves are deceptive, they're deceiving, they are, put out this absolute feel like we're breaking above moving averages, we're bullish, 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 or bearish, depending on what direction. This one happens to be in the advancing position. So that does begin to tell us that we can continue now to break higher. You can already see just by what I've labeled that there is quite a bit of resistance between here and the all-time highs at 45.59. There is resistance, it's solid resistance all the way up. So let's try to take a look as to what can we now expect. Well, here we have the C wave, and within the C wave, since C waves are always 5-wave structures, and what we've got going on is minute wave 1 of C, wave 2 of C, wave 3 of C, wave 4 of C. And now we're in that 5th wave. That 5th wave should also begin to form its own 5 waves. So I'm bringing this down to the hourly chart now. You can see that it really looks like we've only just completed wave 1, maybe? 1, 2, 3, 4, 5. 1 of 5. So if that's the case, I would expect a small pullback, maybe back to 44.69, maybe back to 44.61. But again, not all that much, as the rally now continues and will likely again pick up steam as this 5th wave advances. So going back out to that 4-hour chart, we're looking for 5 waves up, from this level, 4317.25, which was the bottom of the internal B wave. So an ABC decline forming wave B of the larger B. I know the labeling gets confusing, but just understand that we have 3 waves up, forming wave A, 3 waves down, forming wave B, and now we're putting in a 5-wave advance to form wave C. And within that C wave, we've completed waves 1 through 4. Now we're in the 5th wave. Wave 5 is also going to break into its own 5 waves, of which it appears at today's high at 44.79, almost 44.80, that we have completed wave 1 of 5. So we have 2 of 5, then 3 of 5, 4, and then a 5. Now let's look at the Fibonacci relationships and levels where we think this could all end up. Right now, we need to relate wave 5 would be related to wave 3. It's also related to wave 1 in that many times it can be equal to the length of wave 1. And if this actually comes in at 43.17 and this high is at 65, then that is 48 points. And if we add that to 36, we're going to be coming in right about here, 44.93. Now, that's where wave 5 could complete if the relationship is going to be that wave 5 is equal in length to wave 1. I somehow don't feel that that's the way it's going to be if this is just kicking off. It could, but I don't suspect that it will. So the next relationship would be that wave 5 to wave 3. And a 5th wave to a 3rd wave. The first and most common is that wave 5 will equal 0.618 of the distance or the length of wave 3. That comes in at 45.29. So we have resistance now at 44.94, 45.11, and then 45.16 or 17, and then 45.29. You see, it continues to stack up at 45.40, 45.42, 45.54. Now, that is at 45.59. If this particular C wave and the structure above, which is a B wave, breaks about 45.49, that would be acceptable and puts in a new high. It would be acceptable, but in that case, we're looking for this level then. We would be looking for 45.78 to 45.87. So this would be the zone. The zone actually is 45.78 to 45.92. That would be the area where we would then expect this B wave from here to there to complete. So our zones now are the following. We do have resistance of 44.94. Possible to hold it and complete it. We then, above that, have resistance, and it's a zone that's building between 45.12, I'll call it, to 45.29. That zone, if it can get and holds at 29, perfect. But the zone itself really goes from 45.12 to 45.43. That's the zone with 54 sitting in the top. So then the next zone above that is 45.55 to 45.93. So these are the zones, and that's where the clusters are taking place. That is helping us to determine how large can this be? How far can this travel? Well, we're being told that Fibonacci relationships, because right now we've got this larger C wave, that would be all of these resistance on this outside. And then we have the internal wave 5 of C, and this is all on the inside. Wave 3 extended quite nicely. Wave 5 can do the same thing. And it's just by building its own 5 waves. So if I'm feeling that this is just going to be the completion point for wave 1 of 5, then we get a little bit of a pullback. We get another larger rally because remember, the third waves, I don't care what position, if it's in the C wave or just in the third wave or in a first wave, wherever that third wave is occurring, it most often is the longest and the strongest wave out of waves 1, 3, and 5. So this is wave 1, pretty strong, pretty strong. Wave 1 was 40 bucks. Actually, a little bit more. No, 40 bucks, almost on the nose. So if wave 3 is going to be longer and stronger, I would at least anticipate 50 to 60 to 70 points for a third wave. Well, we would have to tack that onto wherever this little second wave comes in. Our support for wave 2 is 44.64 down to 44.54. We have about a 10-point range off of this high for that market to bring itself back down and put in a wave 2. Technically, we have to allow all the way down to 44.36. So it could come back and pretty much retrace all of wave 1. It just cannot go beyond it. So initially, I'm going to be looking for 54 to 64 to contain this small wave 2. We do have additional support coming down and resting just above all that at 37. And it cannot break below 36. Below 36 would put the cap of this whole move right there at the high. Or if this continues to rally above that, it'd be wherever that high is, and then it pulls back. If it breaks all the way down, then that's the top. And then we just label that a C, and we're off on the next decline. I still believe that the market is just rallying higher on expectations of very strong earnings from the tech sector. This seems to be what's floating around in all of the discussions and all of the different analysts that do produce or put out their analysis are basically that the expectations are for Apple, Amazon, AMD, Salesforce, PayPal, Facebook in particular, Google, Intel, Microsoft, Netflix, NVIDIA, Tesla, all of these larger stocks. And then we have Moderna, we have many stocks within the NASDAQ, and many stocks, of course, the 500 stocks within the S&P that will continue to drive the market higher. We're just basically in the beginning of these earnings reports. There are a lot of stronger earnings that will be coming out between now and Friday, but the stronger ones, the bigger ones, really come in between the 26th and the 28th of October. Again, we have Apple on the 28th. We have Amazon on the 28th. We have Facebook on the 26th. We have Google, I believe, also on the 26th. We have Microsoft on the 26th. So you can see that there's quite a bit that's stacking around that. We have Netflix tomorrow. And NVIDIA won't be, NVIDIA will not report until I think, till November. But we have Netflix tomorrow. Market rallied up in anticipation of the earnings. And that's what really we are working through right now, this earnings season. And as I said here, the market continues to rally on a hope and a prayer that these earnings are going to be great and that the bull market is back on. All of this decline and all of it that went with it is now behind us. So you see the conversation turn, and you see that it just starts pumping in more positive information, and it's tradable. And that's what we're here to do. We are here to trade these moves. And so the moves themselves are going to continue to be tradable. the volatility continues to kick up. The VIX, although it ended basically unchanged, does continue to register higher. And here the VIX index, the future, did go up today. So against a NASDAQ racing up 155 points and the S&P 13.5, volatility also rose. So that keeps the moves a little bit on the larger side. And as we look at our hourly chart, and you open that up, you can see that it truly was an explosive morning, a little bit of a pullback right at the noon hour, and then just another 3 hours of straight up, pretty much just straight up, and then selling it off right at the close. And it was very brief and very small thus far. So what I'm looking for tomorrow, I believe that we get a little bit of a pullback. I can throw in very briefly, and I'm not going to keep it up there because it gets to be a little confusing. But if this is the start and this, come on, put it in there. Thank you. And that's 79.75 right there. Then 382, which is pretty common, is at 44.63. So it doesn't look like we're going to get very deep on a wave two. The most common is 44.63. Outside of that, well, I think that we should hold the moving averages. So that brings us, first one is 44.75. I think that one will get broken. But then 44.68 down to 61 is the 8 and then the 4, and we have that Fibonacci right between them at 44.63. So I think that that zone will contain a wave two and then start to revert back to the rally, back to the advance, and take us up to these next levels up above at 44.94, 45.11, 16.29. Right now, I'm looking at 45.30, 29.30 to be a pretty strong candidate to complete the move. So wave three brings us up to there, possibly. And then we get a little wave four, and then we get a wave five, and that completes this other minute five. And then we're looking at the completion of the minor C wave. So let me pull it back out again so we can see that. And open that up. We've got the minor C wave. And then we're going to label that as intermediate wave B. What comes after that is what I've been discussing. No matter if this ends up here, whether it ends up at 45.78, it's still, in my opinion, will be followed by a crushing C wave. And that's all a part of this initial 3 waves down to form primary wave A. This is a longer term between 5 and 9 years to unfold a super cycle wave 4 decline. So tomorrow, pullbacks will be shallow. I think the wave 2 should be contained between 44.64 and 44.53. We do have some potential for it to come a little bit deeper. It cannot break below 44.36. Then it becomes something else, and we'd have to take another look at the market as if maybe a possibility that the C wave is complete. Right now, that's not what I'm looking for. That's not my expectation. The rally continues, and there are our resistance zones. And that's going to be it for today. The market is confusing, but here we are working through the earnings season. And it almost seems that that's pretty much what we do. We just work our way in between, never really getting too far because there's always that anticipation of the next earnings season. And so that's what we're doing yet again. So we'll make it. And they're very tradable. Let me just also say that these moves are extremely tradable. We can't get ourselves wrapped around that they're breaking levels. That's an important factor to keep in mind, but don't let it control how you're going to trade. We're going to trade according to the moving averages. Right now, the moving averages are continuing to display that we're going to go up. The 4-hour 50 is getting ready to break above the 4-hour 200. The 20 is already rising pretty strongly. The 50 is rising. The 200 is starting to curl up. All very positive factors to continue for a continuation of this advance. That's where I'm going to leave it. Our next update is Tuesday, the 19th.